In recent years, climate change and the growing awareness of its impact have popularized more sustainable and environmentally friendly forms of investment. But do you know what sustainable investing really means? And do you understand what is meant by green or eco-investing? In this article, we will explore the concept of green investing and its potential benefits for both investors and the environment. So, let's dive in and learn more about this important topic. Today, we're going to talk about sustainable investing, which means investing in financial products or companies that are environmentally and socially responsible. These investments are aimed at benefiting society and are dedicated to environmentally friendly businesses or businesses that promote the development of new technologies aimed at transitioning to clean energy, sustainable agriculture, or preventing environmental pollution. Many people thought that sustainable investing was just a trend aimed at improving the image of certain companies, but the truth is that over time, this trend has become a necessary quality in every strategic plan presented by companies. In fact, at the Rio+20 conference in June 2012, world leaders agreed that more sustainable business practices are an indispensable tool for global development with greater social and environmental awareness. Many investors have been impressed by this social and responsible wave, and in their portfolios, they prioritize financial products related to projects aimed at improving the lives of others through active or passive investments, through a consultant who advises them. So, if you want to make a positive impact on the world and your investment portfolio, sustainable investing might be worth considering. Sustainable investments, eco-investments, or green investments. Awareness of climate change has been growing since the 1990s, and in recent years, this movement has become mainstream, as we have seen in recent months with the followers of Swedish teenager Greta Thunberg. This has prompted large transnational corporations to make significant efforts to combat pollution either through social funds or by incorporating a certain area into their business. We are talking about investments directed at companies or projects committed to preserving natural resources, promoting clean energy sources, and environmentally responsible practices. We can talk about two main types of green investments. Direct green investments. These are investments whose income comes directly from the environmental activity of the chosen company. Indirect investments. The capital that the trader invests is directed to companies whose main business is not related to ecology, but has a direction related to eco-movements. To find out if a company is truly green, it is important to carefully study the companies, their foundations, and the numbers in the profit and loss report. Green investments are truly in a gray area. There are investors who consider traditionally non-ecological companies, but with environmentally conscious business practices as green investments, while there are others who do not. For example, the oil company Repsol, which belongs to one of the sectors with the greatest environmental pollution, created a renewable energy subsidiary in 2019 to develop its business in the green energy sector. Many will think that investments in alternative energy do not offset the pollution of the environment in your main business. Green investments, sustainable financial products. There is no doubt that green investments have a long history and great potential, as many prestigious managers have discovered in recent years. Not only do they provide profitability, but they also contribute to the preservation of our planet. There are two options for investing in green assets. White heavy checkmark, choosing environmentally efficient listed companies and directly purchasing some of their shares, which allows for regular payouts in the form of dividends. White heavy checkmark, invest in vehicles that run on a green underlying asset. In addition to the above, financial instruments for investing in the environment include, among other things, white heavy checkmark listed securities. This type of investment relates to the first option, direct investments in stock markets. To choose a green company, a very careful analysis of the company is required to ensure that it is truly environmentally efficient. Many traders or investors do not have the time to conduct this analysis or do not know how to do it, so they opt for passive management, leaving their portfolio in the hands of a manager. One popular option is investing in exchange-traded funds or ETFs. These are registered investment funds that cover a wide range of markets, including those focused on environmentally and socially responsible criteria. For example, the UBS ETF LU, MSCI World Social Responsible UCITS ETF, became the first sustainable fund to exceed €1 billion in the summer of 2019. Traditional investment funds are also a popular option, especially for small investors who want to diversify their investments without analyzing individual companies. Many large fund managers offer funds specializing in green investments that include both equities and fixed income. Sustainable pension plans are also becoming more popular, with investments directed towards socially responsible companies. These plans help investors save for retirement while contributing to a sustainable future. Green bonds have seen a geometric progression over the past decade since the World Bank first issued them in 2007. It is estimated that this market could reach $750 billion by 2020. Many governments have launched these types of bonds, such as Spain, which ranked 7th on the green bond market after issuing over €2 billion in the first quarter of 2019. As we move towards a more sustainable future, it is essential to consider how our investments can contribute to this goal. Whether it's through ETFs, traditional funds, pension plans, or green bonds, there are many options available for sustainable investing. The Dow Jones Sustainability Index, DSJI, is a variant of the Dow Jones Industrial Average that focuses on sustainable development and has become a global benchmark for green investments and social commitments. Created in 1999 by Robeco Sam, DSJI has very strict criteria for inclusion in this elite group of 300 companies. To be included, Robeco Sam conducts a thorough corporate sustainability assessment, CSA, based on the following criteria. Heavy checkmark environmental criteria, environmental policy, and eco-efficiency. Heavy checkmark economic criteria, issues such as risk management or the business itself. Heavy checkmark social criteria, human resources and social responsibility. Being part of the DSJI requires a deep commitment to sustainability across all aspects of a company's operations, and being included in the index is a significant achievement that demonstrates a company's leadership in sustainable development. Today, one of the leading companies in terms of environmental criteria is Tesla and its clean technologies. Founded in 2003 by Martin Eberhard and Mark Tarpenning, Tesla is one of the pioneers in the development of electric cars. It became more widely known when Elon Musk, who became a shareholder in 2004, took over as CEO in 2008. Tesla went public in 2010, and from the beginning, many doubted its potential in a market where the necessary infrastructure for the full development of electric vehicles still does not exist. The company entered the stock market in early 2013, and in early 2017, it rose from $40 per share to nearly $300 during a bull rally. In September of the same year, it reached $390 per share. Until April 2019, Tesla's shares followed a long-term upward trend. However, the company's poor financial results in the first quarter of 2019 dealt the final blow, a significant technical breakdown below the long-term trend line, with the support level shifting from $245 to $180. After this support, the price slowly began to recover. In early 2020, Elon Musk's company shares sharply increased in price, rising more than 100% in just 1 month. So, Tesla stocks can be considered a promising investment in terms of eco-friendly technologies. In conclusion, environmentally sustainable investing has gained significant attention in recent years as people become more aware of the impact their investments can have on the planet. The Dow Jones Sustainability Index, DSJI, is one such example of an index that focuses on sustainability, with strict criteria for inclusion. Companies such as Tesla, with its innovative electric vehicles, have proven to be popular choices for eco-investors. Despite some financial struggles in the past, Tesla has continued to grow and expand, demonstrating the potential for sustainable companies to thrive in the marketplace. As more companies embrace sustainable practices and investors prioritize environmentally conscious options, The future of eco-investing looks bright.